stocks jump after falling behind on gains in overseas market following a holiday. Utilities and energy lead the gains while consumer discretionaries and autos lag.
Reliance Industries rallies in today's trading session. This is after it calls a meeting of creditors and shareholders on May 2nd to approve the demerger of its financial services business. Reliance shareholders will get 1 share in Jio Financial Services for every 1 share held.
Several large defense orders and wins for the likes of Bharat Electronics, Bharat Dynamics, Garden Reach Shipbuilders and Cochin Shipyard boosted defense stocks today.
Properties gains after a likely private equity stake sale. Jain Irrigation rises on divesting its overseas business. A deal closure buoys GSW Energy, while an order win boosts Tata Power and a license deal props up Aether Industries.
Well, good afternoon. Welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra. We're missing Mangalam today, but of course it is a weekend coming up and it was a holiday yesterday. So pretty much it's holiday time across the market, but good times for the bulls as well. I mean, the market has not given up on any of its gains. It's held steady through the course of the day. And that's the best part about today. There's been no real profit taking. Good going on the Bank Nifty as well, up about 550 points. There are a lot of big cues lined up next week. We kickstart with the auto sales tomorrow. You have the RBI policy next week as well. And then you have, the slew of earnings that begin on the 12th and 13th of April. So there are a lot of cues. But ahead of that, the market is pretty fine, Ekta.
Hi, Sonia. Yes, absolutely. It's, actually been a good recovery for the markets as compared to what we've seen, at least in the March series. So, for example, just want to put it up on a week-to-date basis at current reckoning, the Nifty and the Sensex both have rallied around 1.8%. The mid-cap index has rallied around 1.7%. Small-cap index is some 1%. But nonetheless, there's been a recovery which you've seen in terms of the entire set of indices. Now, what has really stood out on a week-to-date basis sectorally is definitely the financials. Yes, pharmaceuticals have done well, but financials seem to have done better. For example, the Nifty PSU Bank Index itself is up 4.5% this week. The Nifty Bank is up 2.7% at current reckoning. Lot of gainers in terms of individual stocks. So, for example, IndusInd Bank is up 6% week to date. ICICI Bank has rallied close to 3% from the PSU banking space. It's State Bank of India, which is up around 3%, and Bank of Baroda, which is up around 5.8% as well. So that seems to be the big, sector which has gained. And separately, it is the Nifty Pharma Index, which has shown some amount of activity after a long time. So up around 2.2% for the Nifty Pharma Index on a week-to-date basis.
Okay, but plenty of stocks to look at, right, this afternoon. So let's get straight to that. One of the stocks in focus is Reliance Industries. It is, in fact, one of the top gainers in trade today after the company has initiated the process for demerger of the financial services business. The meeting will take place on the 2nd of May, where shareholders will meet to not just rename the company to Jio Financial Services, but also decide the future course of the demerger. Shareholders will get 1 share of Jio Financial Services for every share of Reliance that they hold. And the financial services business is looking to grow in a big way. In any case, it has an asset base of around 28,000 crores at the moment and revenues of in excess of about 1,500 crores or so. The financial services business has investments across several companies. So whether it's Jio Payments Bank, Reliance Payment Solutions, Reliance Retail Finance Limited, and the management is looking to grow this business in a big way. Also, the contingent liabilities will not be transferred. So after the scheme becomes effective, no litigation or contingent liabilities will be transferred to Reliance Financial Services business. Remember, the contingent liabilities so far were about 1,900 odd crores. There's a lot of key personnel that has been appointed to grow this business as well. KV Kamath is on the board. He's been appointed as an independent and non-executive chairman, and Hitesh Sethia has been appointed as the CEO and MD of the entity. Hitesh Sethia has over 20 years of experience, and he's currently heading the European vertical at McLaren Strategic Ventures. So, key personnel in the business. This is, of course, monetization of their stake, and it's positive for shareholders, unlocking of value as well. So the street definitely likes that. But pharma stocks are also buzzing in trade this afternoon. So let's get talking about some of them. Ekta, what are you watching?
Well, it's a whole host host of pharma stocks that I am watching in today's trade. I'll start with Alembic, which has rallied quite significantly. So there's a bit of positive news which has come through where they've got the final US FDA nod for an ophthalmic solution drug, which is basically used to treat glaucoma of the eye or hypertension of the eye. Market size is $97 million. Now, it's generally tougher to get approval for ophthalmic drugs or injectables, and hence it's definitely a positive for Alembic. It feeds into the sentiment positive that it started the week with, which was basically their Karkari plant getting inspected without any observations by the Brazilian regulator, and the injectable facility at Karkari, in fact, being inspected by the US drug regulator and only being issued 2 observations. Separately, Piramal Pharma is seeing a bit of a comeback today. Remember that the stock has corrected significantly from the time it listed last year. But nonetheless, the news today is that it is supporting one company, Theracos Bio, with an integrated drug substance product program for one of the company's drugs, which is a diabetes drugs, bexigliflozin. Now, the FDA nod, which was given to Theracos Bio's this particular diabetes drug, was based on a safety evaluation of 23 clinical trials, 5,000 participants, and Piramal will be completing the manufacturing of the drug substance and drug product for this particular diabetes drug. So that stock is higher on account of that. Lupin is the other one which is in focus on account of news. No good news there. So, for example, they've been issued a Form 483 with 10 observations to the company's Pithampur Unit 2 manufacturing facility, which was inspected just this week. The plant already has a warning letter which was issued to it in November 2017. So the street is probably, going with the thought process that it's going to be a long road ahead in terms of recovery for this particular facility. Now, Investec is also written on Lupin. They have a target price of 580 with a sell call. According to them, the Spiriva generic opportunity might not be as great as it was anticipated to be. Spiriva is an inhaler drug which the company is expected to launch in FY24. Spiriva HandiHaler, which is one of the type of the drugs, the opportunity for Lupin is shrinking according to Investec, and it poses a risk to street estimates. Spiriva HH, which is the HandiHaler, volumes are down 14% year-on-year, and the total brand volumes are down around 7% on a year-on-year basis. So they're not that optimistic about the Spiriva generic opportunity as probably what the street had anticipated it.
Okay, another stock in focus is Canfin Homes. It's buzzing in trade following the company's conference call. Abhishek is here to give us the key highlights from the call. Abhishek, over to you.
Well, Sonia, as you mentioned, Canfin Homes have had a con call with the new management in place for, analysts. So Q4 progress is good in terms of performance. The business momentum in Q4 has remained strong. They said that there is no negative surprise in the book. Industry is growing at 15%, so they are comfortably placed to see a 20% growth in disbursals. They expect only 25 basis point increase in interest rates, so they expect the spreads to remain stable around 2.2 to 2.3%. They will see good growth once the interest rate actually stabilizes. Currently, they have passed on the tenure, and if interest rates comes down, the tenure will be adjusted. So this means that, the EMI has got prolonged in terms of tenure, while the price or the total EMI per month has remained same. Loss ratio has been minimal, which means that they have sizable amount of funding from the bank as well, which will augur well in terms of interest rates being passed on going ahead. They can grow the builder book as of now, given the fact that it is on the lower side in terms of the total book. Small ticket sizes where they are seeing the growth coming from, which is about 22 to 25 lakh ticket sizes where the growth is coming from, and they are quite comfortable on capitalization of the company. Back to you.
Okay, all right, Abhishek, but stay on because there's lots more news. SBI Card is also gaining. This is after a Jefferies note. They've initiated coverage. Tell us more.
Well, Ekta, as you mentioned, Jefferies has initiated coverage on SBI Card with a buy recommendation and a target price of 900 per share. They say that there is strong franchise that SBI Card has in terms of credit cards. They estimate 23% CAGR in card spends over FY23 to 26. This will be led by two key factors. One is customer acquisition from SBI and the wide co-branded card tie-ups that SBI Card is having. So net interest margin as per them is expected to bottom bottom out in H1 FY24, and they see improvement in net interest margin over FY24 to 26 as revolver mix. Now this revolver mix means loans which are overdue for more than 45 days, that inches up and rates actually stabilize. So healthy profit growth and 23% plus ROE is expected over FY24 to 26. The recent underperformance versus Nifty is likely due to the factor that net interest margin concern has been seen with investors. So the key risk, they say, is that there is threat in terms of competition from Bajaj Finance, as well as the fact that higher spend share gain by UPI, that could mean a potential disruption. However, they say that rise in revolver mix as well as peaking out of the rates will augur well for SBI Cards going ahead. Back to you.
Okay, thanks a lot for that. Let's slip into a quick break on that note. But on the other side, we'll connect with Kapil Kaul of Gaba for an outlook on how the aviation sector could shape up in FY24. Lots of travel, so many long weekends. So what is the prognosis? Stay tuned for that. Welcome back to Halftime Report on CNBC-TV18. Well, for now, let's focus on the aviation sector. CAPA, which is, the Center for Aviation, has come out with a release on how the aviation industry could shape up in FY24. Kapil Kaul, who's the CEO South Asia at CAPA, joins in now to give us more details on what he expects this time from the industry. So in their report, they do say that they expect domestic traffic to increase by 20% year on year and international traffic to increase by 22 to 27% in FY24. So it promises to be a very good year. Kapil, thanks a lot for joining in. Before I talk about, what the year to come will look like, I also noticed that you're talking about how the P&L of these companies could get impacted quite a bit because a lot of planes will be operationalized in FY24. 100 plus aircrafts were on the ground now because of supply chain issues, and now they'll sort of be operationalized, and that would involve a lot of maintenance costs as well. Tell us a little bit about that. How much could the profitability get hit, and what is the prognosis with respect to players like Interglobe, SpiceJet, etc.?
Okay, good afternoon. Good to be on your show, Ekta. I think we are, after a long time, at a very inflection point in aviation. I haven't seen the industry for the last 20 years. I think we are at a critical stage where we can have a structural shift, and those structural shifts are visible. Now, before I come to the structural shifts, I'll just explain that currently we will close the FY23 year at about 137-38 million passengers, just short of 140, so more or less back to pre-COVID in terms of domestic traffic. But the system demand is roughly around 15 to 20 million more. And that's because of serious capacity shortages. And that serious capacity shortages is primarily because we have about 100 plus aircrafts on ground, and they've remained on ground for a pretty long time. Most of the airlines, in fact, all the airlines have aircraft on ground, and they are struggling to get them back in the air. In spite of that, the number of aircraft on ground, we are also expecting that the inductions for next year are going to be roughly about 135 net inductions. So the aircraft on ground and the aircraft that are likely to be inducted over the next 1 year, it's 200 plus. But we recognize that the aircraft on ground are not going to be coming so soon. We expect them to be back in air by June, but it could spill over to Q2 of next fiscal. So you will see most of the capacity inductions from second half of FY24. Keeping the aircraft on ground and their inductions back over the next 6 months, and for the new inductions to come, we expect the growth to be in excess of 20 to 25% for domestic. Coming back to international, I think in spite of the fact that the bilaterals for foreign airlines continue to be constrained, the focus on growth will be led by Indian carriers. Air India will, my assessment, activate in the next 12 to 18 months, roughly 20 plus aircraft, 20 to 30 wide-body aircraft back in service. Some of them are grounded and some of our new inductions. So that's going to power the long-haul and ultra-long-haul growth after a long time. In addition, you will see Air India Express and the Vistara combined expanding on short-haul and regional international routes. Indigo has an exponential growth story going forward, so the growth is positive.
So, you are indicating that there's a lot of supply which is coming through to service the capacity or service the demand which is estimated. But do you think that this amount of excessive demand, which you are estimating maybe a 20-25% growth on a year-on-year basis, is enough to possibly mitigate some amount of the impact of ATF costs, which are around 45% of the operating costs of an airline?
I think the ATF is a good story so far, though we have modeled $85 of Brent in our estimates, but it could be around 80 as well. In addition to that, the efforts of the Ministry of Civil Aviation in terms of reduction of VAT, we have recently seen Bombay moving on from 25 to 28 to roughly about 18%. Except 5-6 states, the VAT is now more or less rationalized. The introduction of MOPAG. There are many factors which will keep the cost side of fuel softer than what we saw in FY23. Though even we are, as I said, model $85 a barrel for FY24, but we would expect cost side to be, the fuel side to be moderate. Now, then you add the induction of aircraft like A320neos, A321neos, which are 15% plus in terms of fuel cost. There's some maintenance cost advantages. I would see those will play out positively in the fiscal FY24.
And what about industry consolidation? There are so many new players, there's consolidation happening. How do you think all of that will affect pricing in FY24?
We hope that the consolidation impacts positively, because after a long time, the industry structure is a little more stable. Between Indigo and SpiceJet, we are expecting 75-80% of market share between them. If that doesn't stabilize pricing, I don't know what would. The power is now more between the two big players, and I would expect these two players to price rationally, whilst continuing to give value to the customers, but continue to price rationally. And that will augur well for the other players who are going to hold the balanced 25% market share. I don't see the structure of pricing going back to pre-COVID. Even though the capacity inductions from second half will be very, very high, that will impact yields. But I would expect that the pricing will reflect strategic intent of profitability, both by Indigo and by Air India, which will augur well for everybody else in the industry.
What is your sense, Kapil, with regards to how Air India could specifically perform going into next year? It's probably going to stabilize its feet a little more with the new management. You're talking about 20 to 25 new aircrafts probably being serviceable. They've struck a huge deal, one of the largest in the commercial aviation space just last month. What is the larger picture, according to you, when it comes to Air India in terms of market share and performance?
So Air India has been lucky, I must say, that they took over and the market structure changed. The demand and supply was different. International, they are doing extremely well. The yields are maybe 40% up, load factors are 90% plus. So they were blessed, actually, that the market structure on international changed significantly. I don't think the story of Air India is around 470 aircraft. The 470 aircraft is just the beginning. Air India had a growth deficit for 2 decades, almost 15 years. So this 470 is largely for replacement. I would expect a much larger order going forward, or very soon by FY26, these options to be converted. Air India's story is about an intent to create a global airline, intent to create an airline of quality, size, and scale that India hasn't seen. There is a clear intent to create a world-class airline. I think the structure that's in place right now augurs well for Air India to reach that milestone. The question is whether it will take 2 years or 3 years, and what are the external, internal environment. But I think Air India is a story of not about size. Size will obviously be critical, but is about creating a world-class airline of size and scale that India and Indian economy would be proud of. I think in that the management intent, and I would say be more than Air India management, it's also the Tata's intent to make this work. So I think Air India is a work in progress, but it is aligned towards making it reach its target of being financially viable and create a global and world-class airline. And I think directionally, it's looking positive.
Okay, all right. We'll leave it at that. Thanks a lot, Kapil, for joining in and speaking to CNBC-TV18. We appreciate your thoughts. Let's slip into a quick break. On the other side, Prakash Gaba will be joining in for some trading strategies. Do stay tuned in.
Well, Welcome back. Well, steady as she goes for the markets. So the bank Nifty is up around 1.4%. The Nifty is managing to hold above 17,280 at this point in time. So let's see whether we manage to inch closer towards that 17,300 odd mark. The Sensex also up a cool 740 odd points. In terms of gainers today, majority of the stocks are gaining, and it is really, you'd have to say, sectoral, agnostic. So, for example, there are around 37 stocks in the green within the Nifty. The top gainer has to be Reliance Industries this afternoon. So that stock is up around 3.8%. Remember that the stock is corrected close to 9% on a year-to-date basis. So it's making up some of those losses today. ICICI Bank, we were pointing out that it's been a great week for the financials. So ICICI Bank, which is already pulled up around 2.6% on a week-to-date basis, has recovered a large part of its losses. That stock is up around 2.8% at this point in time. Nestle, Tata Motors, Infosys, Dr. Reddy's, all of these stocks seeing some amount of buying in today's trading session. But the big Q, which is probably helping our markets in terms of sentiment today, is a Morgan Stanley note where they've upgraded India to an equal weight rating. Sonia is standing by at the wall to explain the rationale and the other details.
Well, thanks a lot for that. As you rightly pointed out, there's a big upgrade on India that has come in from Morgan Stanley, where they've upgraded India to an equal weight. Jonathan Garner of Morgan Stanley, has put out a report where he explains that the key rationale behind the upgrade on India is because of the narrowing valuation premium and a resilient economy, despite all the news flow that has come in the last fortnight. He's also very bullish on the structural growth outlook for the Indian market. Now, he says this growth will be driven by a digital infrastructure-empowered lending boom, the demographics of India, domestic demand is picking up, as well as an improving FDI situation. Now, apart from India, Morgan Stanley is also quite bullish on a couple of other markets in Asia. So they're overweight on China, Korea, on Taiwan, and they say that the financial contagion which was expected could be limited in some of these markets across Asia because of the relatively strong liquidity position and the capital position. The only market that they have downgraded is the UAE financial market to an equal weight. But coming back to the Indian market and what they're bullish on over here, the focus is clearly on two pockets, financials and consumer discretionary sectors. They have turned more positive on consumer discretionary, also on the healthcare space, and they say that the uptrend in India's economy will definitely stimulate consumer spending going forward, and that's the pocket that will look good. Also, it's a direct beneficiary of higher income as well as likely abated inflation. Hence, a bullish view coming in from Morgan Stanley on the Indian market. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's Morgan Stanley's view on India. That's some important positive news coming in for Lupin. The stock has been down and out in today's trading session, but they've received approval for a hepatitis C drug. That stock has recovered a little bit from the day's low. Time for hepatitis B. So that's what the drug is used to treat. We'll take a short break. Up next, that technical check with Prakash Gaba.
Welcome back. Still a very good day for the market. There is no profit taking. There is no sell-off that we've seen. Stable as she goes. Prakash Gaba joins in on the show. Prakash, these are rare moments, right, where you get such a big gap up and then it holds. I mean, generally there's a lot of volatility that kicks in by this time, but let's not jinx it. It's looking pretty good. Do you think it could put on some more weight through the course of the day? And do you think the worst of the sell-off is now behind us? Could the market hold on to the lows that we saw in March?
Well, good afternoon to you. Looks like it's given a breakout and formed a base as well. And a base is around 16,900. Previously, we have seen a support at 60,800. So very good chance. This place now, at this point of time, where it's trading now 17,300, is a stiff resistance. But if it holds here and stays here, and if Monday goes up, I think then we are out of the woods. That's the feeling I get. But even if it dips, assuming for a moment if it dips on Monday, but if it doesn't break 16,900, then it's a sign of strength. I would say the worst is over. These are the initial signs when I'm looking at Nifty. And when I'm looking at Bank Nifty, it's clearly given a good breakout, 40,000, strong support zone. The way it broke out from 40,000 gives me some kind of solace that maybe we can see higher moves. If that happens, where? Maybe 41,000, maybe 41,500. Now, it can go to 41,500. That would be a natural reaction. A dip would be viable then. So I would say that on Bank Nifty, 39,000 is a very important support to work with, though we are trading beyond 41,000. But I'm looking at a higher perspective.
Okay, how would you approach financials, Prakash, the strength that we've seen?
I think I like financials. Certainly, I would say that in ICICI Bank is looking good. It's seen a good base formation, and a breakout from a base formation on a very strong bar is encouraging. Trading at 876. Is it going to 890? Very good chance it's going to 890. Stop below 870 should be fine. So I would say yes, financials are looking good, and I would look at even HDFC Bank. From a slightly longer term perspective, the chart is good. In the short term, there's a trading at 1598. It can go 1620 also. I would have a stop below 1590 on HDFC Bank and perhaps trade long here.
All right, thanks a lot for that. HDFC Bank is a stock that everyone runs to the minute the market recovers, right? You hold on to a lot of the bluest of blue chip names. Got that. Well, let's slip into a quick break. But as we do that, let's listen into some market opinion that we got from Mihir Vora, the Director and Chief Investment Officer at Max Life Insurance, coming up.
I think industry keeps trying that. They keep trying to compensate for volumes by hiking prices. And if the market's good enough, they stick. Not only in cement, but across sectors in the last month or so, we are seeing some signs of even consumer discretionary demand slowing down. See, this seriousness with which the government is approaching domestic manufacturing is here to stay, whether it's in railway or defense. And if we think that defense indigenizations can go from 60% to 75% or even larger, and similarly the way the railways is almost tripled its expenditure in the last 3-4 years. I think the government is hell-bent on making sure that we do things domestically. And we have seen that typically, once the ecosystem in a particular industry develops, then even exports become more competitive.
Welcome back. Well, let's get talking about a couple of other stocks in what is a lively market. Defense stocks are, in fact, one of the big flavors for today. It's buzzing a trade on the back of several large defense orders and wins that have taken place. Vivek Iyer is here with the details and the roundup of all of these orders.
Well, absolutely right. It's a slew of order wins as far as the defense space is concerned. Yesterday, the Ministry of Defense uploaded various order signings that they're done with various listed PSU companies. And, some of the companies have seen very large order wins coming in, towards the end of the fiscal year. Now, Bharat Electronics, this particular company has got two separate order wins. Now, the first one is worth almost 5,500 crore. Now, this is 10 contracts worth, and it is for the Indian Armed Forces. Additionally, they have also received another order win worth almost 2,700 crore, once again for the Indian Armed Forces. Bharat Dynamics is the second company that we are tracking. The company yesterday received an order worth almost 8,161 crore for Akash weapon system. Additionally, also got an order worth a little over 260 crore. Now, this is for the helicopter systems. Now, the order book of the company after this particular order win has now crossed almost 24,000 crore. Very healthy order book position over there. Finally, we are looking at two stocks, within the shipyard space. Cochin Shipyard, earlier the company was declared as the L1 or the lowest bidder for this particular order, but yesterday the company has gone ahead and signed and got this order onto their books. So next generation missile vehicle vessel at almost 9,800 crore, the company was declared L1 for this particular order in February of 2021. Lastly, Garden Reach Shipbuilder company yesterday booked orders worth almost 3,600 crore for 4 offshore petrol vessels. On the back of these slew of order wins, the entire space is abuzz today.
All right, thanks a lot for that. Well, not just the defense and railway space, but there are plenty of other stocks which are in the news. There's Jain Irrigation, Sri Renuka, Aether Industries are all surging. Surbhi is here with more details on that. Surbhi, over to you.
So I'm watching out for a couple of stocks. The first one is Jain Irrigation, where the company has announced that it has completed the merger of its global irrigation business with Rivulus. Now, this merger was announced in June of last year in a cash and a stock deal. All the regulatory approvals related to the merger has been received by both the entities. Now, post this merger, Jain Israel, the subsidiary of Jain International, will continue to hold a minority stake of 18.7% in the combined entity. The merger will help reduce the company's consolidated net debt by 44%. So the 6,415 odd crores of debt will come down to 3,600 odd crores. Also, post the merger, the company will release a corporate guarantee worth 246 crores. Next on my radar is Sri Renuka Sugars, where the company has commissioned activities on the expanded ethanol capacity. In its Athani plant, it has expanded its capacity from 300 KLPD to 450 KLPD, and in its Monoli plant, it has expanded its capacity from 120 KLPD to 500 KLPD. Now, management had earlier indicated to us that the expanded capacity will help increase ethanol volumes by 20 to 25% in the coming fiscal. The full benefit of ethanol capacity expansion will only come in FY24, and they will be supplying close to 20 crore litres to OMCs in FY23. And lastly, Aether Industries. Now, they have executed a letter of intent with Saudi Aramco Technologies company for Converge polyols technology and its product series. Now, just to alert, this is the third partnership with a global major that they have signed in the last 6 months. The first two were with Polaroid and Otsuka. Now, Saudi Aramco and Aether have been working on this product series for the last 2 years, and these polyols find applications in coatings, adhesives, sealants and elastomers. Analyst estimates that it has a revenue potential of 200 crores annually.
Okay, all right, Surabhi. Thanks very much for that. For a first day of a new series, there's definitely a lot of stocks in focus. Back to Vivek now. He's tracking JSW Energy, Tata Power, which are also buzzing. Vivek?
Well, that's right. Some action in the power space as well. So JSW Energy largely along expected lines. It was expected to conclude by FY23. So the company yesterday intimated that they've gone ahead and completed the acquisition of the renewable energy portfolio of Mitra Energy. Remember, this particular acquisition adds almost 1,750 megawatts to JSW's renewable energy portfolio, and the Mitra portfolio assets actually have long-term PPAs with an average remainder life of close to 17 years. Now, Tata Power, quite a few announcements that the company made yesterday. Number one, under the PLI scheme, they've been the beneficiary, and they will now be setting a 4,000 megawatt capacity in Tamil Nadu, and this will be under the PLI scheme. Also, the company also got an LOA, a letter of award, of almost 1,750 crore. Now, this is to set up a 300 megawatt solar power project for NLC India in Rajasthan. Lastly, in other news as well, the company board has gone ahead and reappointed Dr. Praveer Sinha as the MD and CEO for an additional 4 years.
Okay, thanks a lot for that. So those are a couple of stocks in focus. Now, what we also have in terms of data is that the auto sales for the month of March will be coming out tomorrow. Of course, we'll be reacting to them on Monday, but let me just give you a brief expectation this time around. So a lot of the dealer surveys indicate that the passenger vehicle space, enquiries and footfalls have slowed down sharply. So that's the narrative over the last many weeks, that waiting periods have reduced further and the passenger vehicle space is undergoing a bit of pressure. The medium and heavy commercial vehicle space, on the other hand, is seeing good demand in March because there's a lot of pre-buying that is happening, as there's a price hike that will come in from the 1st of April because of the new emission norms that come through. So there's a price hike of 3 to 5% from April 1st. Hence, in March, there's a lot of pre-buying and hence MHCVs will look good. Two-wheeler demand is steady, but there's no recovery that we've seen just yet. In fact, Royal Enfield's waiting period has actually fallen, indicating that there's some weakness in demand, especially in the premium motorcycle segment. And the risks to the monsoon because of El Nino is something that could impact rural demand further. So let's take a quick look at what's happening with individual stocks. Let's start with Ashok Leyland, which could be one of the better ones of the pack. 9% growth is what Nomura has put out on Ashok Leyland on a year-on-year basis. In the two-wheeler space, Bajaj Auto, Eicher Motors, Hero MotoCorp. Bajaj Auto could be under pressure because of the export slowdown. Eicher Motors growth will reduce to low single digits, just about 6% and Hero MotoCorp as well could at best do about a 9% gain in their sales this time. For Maruti, the total sales are expected to fall by 8%. As I said, passenger vehicle industry has been under a bit of pressure, and that will showcase in the market leader Maruti. So I'm expecting a fall of 8% there. So it doesn't look like it's going to be a great showing this month.
Okay, and we do have the core sector data which will be out as well for the month of Feb. So that is something that the street will be watching along with other high frequency indicators such as the auto sales. Well, in terms of the broader markets, there's still a lot of stocks which are gaining. Just to point out maybe a couple of them, we have a lot of traction coming into specific names such as Sudarshan Chemicals. So that stock is up around 4% odd. Krishna Diagnostics, not that great in terms of volumes, but nonetheless, that stock is seeing some amount of buying. So that stock is up around 2.3% at this point in time. So there is definitely individual interest which is coming in within the broader markets. If you move towards more of the volume-led ideas today, there's Vodafone Idea, which is surging on good volume. So it's up around 0.8%. Nonetheless, 5.9 rupees stock, but nonetheless seeing some amount of traction. Yes Bank too is higher by around 0.7%, 15 rupees stock there. And even a couple of these Adani stocks are not doing too badly today. So for example, case in point would be Adani Power, which is up around 5 odd%, Adani Wilmar, which is up around 5 odd%, and Green, which is marginally higher, up around 0.2%. We'll take a break. Up next, commodities. Stay tuned.
Welcome back. Joining us on the show now is Tarun Arora. He's director at IG Group of Companies. Tarun, hi, good to have you. And we've spoken about weather impact on various asset classes. We haven't done it on horticulture, by the way, but the latest reports do suggest that production of fruits and vegetables may decline by nearly 30%. First, the heat wave and then that rainfall and hailstorm at various places has had its impact. Are you working with any numbers at all?
Yeah, I think the weather has been turbulent this year. It's been really, really bad. And we're looking at a significant drop. We don't have clearly in terms of the overall holistic sector it's hit, but there are different micro pockets which are largely more hit than versus the others. So overall it's going to be down. That's what we know. And from the micro climate perspective and the geography perspective, it could be very different in terms of numbers, but some could be more, some could be less. So that's where we are. Just to cite example, I think grapes, in which we are quite prominent, seems to be really bad. The northern Indian belts with some apple crop and pear crop. Currently, it was time that it was just waking up. The trees were waking up and they're just moving into the flowering. So those gonna be hit badly, and that's what we see. But it's still too early. I think we'll know soon that where it is going.
Clearly, when you talk about geographies as well, Tarun, we do understand Maharashtra has had its fair of bad impact on the flowering and the fruit nutrition value as well. Not just Maharashtra, various parts of North, Central India have had an impact as well. Any state you think has fared worse than the other?
I think you're absolutely right. I think Maharashtra is definitely is one of the high impact, and even Uttarakhand now, even some pockets of Punjab. There was a cyclone up in Nabor for citrus, which had a high impact there. So yeah, I mean, it's sort of tough because you only get to know when they are sort of at the stage of picking and okay how the flowering has gone, and then so it's still fairly early because this is very turbulent off-season rain, and it's still very early to say how much will be the actual impact. But yes, it's a high impact, and from horticulture, especially from the product mix that I come from, fruits and vegetables, the fruit sector definitely is seeing a high degree of pain.
Oh, I can tell you that. Also just going to push you for some more numbers here, Tarun. If I look at the fruits and vegetable output, we saw 334 million tons in 2021. 21-22 was a record 342 million tons. How are we? I mean, are there any numbers, any estimates out yet for 22-23?
It's tough to again estimate in really forecast. However, I'm probably if the overall impact, because still not stopping. Even today, the climate was really bad. We have our melon farms which were hit badly in some bits of Nasik. But I would assume that looking at this, we probably be anticipating 300 million. Also, it is not only about what you produce, but what quality you produce, because some of the quality that you produce might even touch 300 million, but you only will get something which is ready to harvest for the consumer could only be 60% of the total thing, and the rest would probably go to processing or other channels. So that's what is also critical. But yes, overall impact is there.
I also want to talk about from the inflation point of view, Tarun, because the prices also have been on a rise for various products, especially horticulture, which is fast perishable as a commodity. How have you seen the prices move on a month-on-month or a quarter-to-quarter basis?
Prices over the last 6 weeks have seen a significant increase. I think over the last 12 months, the increase was there, but it was not as significant as we have seen in the last six weeks. And something which I really am worried about, that we see this continuing, because the overall supply over the next quarter seems to be more scarce versus what we have seen previously. There was enough supply there. So I think prices will move up, and we could look at a good amount of increase even from here over the next quarter for fruits.
Any percentage number that you would want to put out when you say 6 weeks have seen considerable increase in prices? A vague number on how much of that rise has been?
At the moment, we're looking at a 15% increase overall from where it was as a market from the last 6 weeks. And we can, in the next 8 to 9 weeks, can look at a similar or even higher increase. So that's our estimate.
Tarun, you are into crop production in India, and you are one of the largest fruit importers in the country as well. When you look at both of these prices, the landed cost as well, how are you differentiating between the two?
I think the import only covers what is not available in the country during the pockets when we don't. So really, it is for a very different segment of consumer, and the prices there generally are much higher, because now with the increase in the currencies and the ocean freight prices, which have now settled, but still the supply chain costs have gone up. The paper prices from the packaging perspective has gone up. So the wood prices have gone up for pallets and for other commodities which are used in the supply chain. So overall import does not really compete as channels and the markets where it goes, because it just covers up for what we don't grow. And from the other side, when you look at when you look at Indian produce is definitely something which is for the consumers more in line for value that they bring in terms of the large amount of consumers. So pricing definitely is there's a variability of at least 30 to 50% for the Indian and the imported. However, now the Indian consumers are also, even because the Indian game of producing in India is coming up. So there is large amount of diversification that is happening in the plant genetic space in India. So already the look of it, when you look at berry segment now, India itself is proud and confident to be able to offer berries for more than 8 months, which was never the case earlier, and at a very reasonable prices, at a more global average prices. So absolutely, India is coming up with crop diversification on the Indian produce too at the global average prices, and whatever is not there is being covered up from the imported side of it. So that's my overall view between both segments.
Okay.
Okay, all right, Manisha as well as Tarun, thanks very much for joining in and taking us through that perspective on the commodity space. Well, for the markets, it is a stable session for us, 17,300. And in fact, we've recovered in terms of gains for the month of May, while for the month of March, for the March series, we ended in the red, but nonetheless, for the entire month of May, we've managed to turn into the green for the Nifty. So let's see whether that manages to sustain or not. We have the financials doing well, advanced decline ratio, which is still holding with a gain of around 4:1. And in terms of Nifty stocks, we have the likes of Reliance, ICICI Bank, Nestle, Infosys, all of these stocks which are gaining. On the losing side, Apollo Hospitals, which has managed to do well on a week-to-date basis, is now losing some amount of ground. So that stock is the top loser on the Nifty, but down only 0.5%. So you need to put the losses into context as well. No sharp cuts coming in for any of the Nifty stocks as we speak. Well, on that note, it's a wrap on the show as well. Stay tuned. Business Lunch up next.